already know what it is. Let's get it. Time to get it cracking. Oh, hold on. Here we go. Yo. Back at it again. You know, it looked like I woke up. Just woke up. I feel like I just woke up. It don't matter. It's time to get engaged a little more than I have been. This video really is just for training purposes only for myself. Yeah, also, if I just, I'm gonna post it on YouTube too, so might as well just do a reaction to the video. This is probably one of my favorite candlestick videos. It was recommended by a fellow trader that I watch quite a bit. The video is long. It's about 56 minutes, 30 seconds long, but it doesn't matter. It's a positive informational video. I'm not gonna go to sleep, but yeah, this video is it's a pretty good video. I've watched it plenty of times, multiple times actually. It really it just helps improve my candlestick awareness of reading the candlesticks. And I watch other videos too, whatever videos they offer on, YouTube for candlesticks. You find the right person, the individual that's teaching it, and get it cracking. Watch all the videos you can. So that's what it's all really about. So yeah, about to go ahead and get it cracking on this. Watching this video again. It's 56 minutes long, so you better grab some earmuffs, some popcorn, some drinks, some of that. We ain't gonna talk about it, but yeah, a little bit of everything. Yeah, let's get it cracking. You feel me? Turn it all the way up. You can hear that shit. You feel me? Let's get it. I might need to move this over a little bit so I ain't slapping. We about to prepare for the movie. About to go to the movies, y'all. Let's get it. It'll be a long day. So, y'all, we're going to watch it together. No, this is not my first time watching it. I watch it quite often, but it's probably one of my favorite candlestick analysis videos. So, we're going to watch it, and we're going to learn about these candlesticks together. You feel me? And it's that Forex trading journey. Yeah, but instead, you just rocking with me through the whole journey. So you can learn it too, for free. You know what I'm saying? Ain't no hating shit though.
Hello once again, my friends. Today we'll be discussing the oldest form of technical analysis
Tired of
in
seeing
the
this
world. Japanese candlesticks.
Talking be putting me to sleep sometimes. I done fell asleep watching the video before. I done so serious. I feel like I'm doing a podcast in this motherfucker. Get that paper up, you cannot yeah, that's that crack.
Harami is credited with developing Japanese candlesticks in 17th century Japan. He's said to have studied and analysed the price patterns, weather conditions and trader psychology of the preceding 10 years before starting to trade. And he's said to have made over 100 successful trades on the trot. He retired a rich man and went on to write the world's first 2 books on technical analysis. The ancients we can learn about
that's that crack. You learn some shit, you hear that sound, and you like
knowledge and experience down to us. The principles of trading developed by Harami, who we could call the world's first market guru, go by the name of Japanese candlesticks. This is also the name of the type of chart used to record price. Japanese candlestick charting and analysis were introduced to the West in 1985, and the charting method quickly became popular. But before going any further, I'd like to quickly run through the basic elements of Japanese candlesticks.
Go on to basics.
The candlestick is basically a rectangle with the open price and the close price at either end. The high price and low price are attached to the rectangle with vertical lines. The rectangle is called the candlestick body, or sometimes real body, and the vertical lines are known as the shadows, wicks, or hairs. If close is greater than open, it means that price has risen over the period, and the candlestick
Man, my damn near
has a
zoned
right
out, that's
body.
crazy.
If close is lower than open, it tells us that price has fallen over the period, and the candlestick is black. This colour change makes the candlestick chart more immediate and easier to interpret than the traditional Western bar chart. Sometimes the candlestick does not have any shadows. These are known as Marabotsu candlesticks. We should be discussing the implications of different types of candlestick throughout this film. Many people feel that candlesticks are more aesthetically pleasing, and of course the West has had an enduring fascination for all things Eastern. The very names of the patterns, for example, the morning star, dark cloud cover, and the dragonfly Doji, are evocative and have a sort of mystical romance. And from an economic point of view, the fact that the Japanese nation became an economic superpower not once but twice in the 20th century suggests there's a lot to be learned from the Japanese way of looking at things. As we mentioned in Chart Analysis 1, although Japanese candlesticks and bars were developed in complete isolation from each other, both charting methods use the same 4 key prices as the basis of their construction. These key prices are, of course, the high, low, open, and close.
The high, low, the open, and the close. Gotta remember that.
The similarities do not end there, and we'll be discussing a number as we consider some of the simple and not so simple combinations of Japanese candlesticks. You'll often come across the terms long and short candlesticks. These terms have nothing to do with going long or short. They are, in fact, more simply connected to the length of the candlestick. It begs the question, how long is a long candlestick?
How long?
That sounds like a bit of a conundrum. Don't be alarmed.
Exactly.
As is so often the case, the answer here is, it's all relative. Generally speaking, the length of the candlestick is the difference between the high and low. The length of the candlestick we're interested in is compared to the length of the average candlestick. Some writers suggest averaging the length of the candlestick either for the last 5 or 10 periods. Others go further and advise using rumors to write a new indicator which gives the SMA of candle length over a natural cycle. For example, for daily candlesticks you could average over 22 days, which is the trading month, or 65 days, which is a quarter.
Y'all better be watching this. For real.
Personally, I let my eye be the judge, and if a candlestick looks longer than the average, it's long. And if it looks shorter than the average, it's short.
Yeah, the iron on the flow. Yeah, I know.
If you'd like further information about averaging out candle length, just drop me a line at fxc@fxclub.com and I'll happily oblige. Of course, you need to take care when working with intraday candles. Please bear in mind that the opening and closing of the major exchanges around the world distort candlestick length and make any comparative analysis hazardous. You must always take the time of day and the currency pair that you're working on into account. But the main features of Japanese candlesticks, the information that they carry and the signals they give off, hold as true for intraday charts as they do for daily charts and beyond. A very effective trade system for intraday trading incorporating Japanese candlesticks was created by V.I. Safin, who describes it in detail in his book 5 Marks for Success. It's available on www.fxclub.com. When we look at a candle, the two most obvious prices are the open and the close. This is not accidental. Japanese candlestick analysis says that these are the two most emotional times of the trading day, the times most governed.
No, do not hit me with an ad, no!
If you have an interest
Man,
in
they
the
just
stock
hit me with
market,
that.
you'll have most probably heard of the January Barometer. This tells us that how the S&P 500 does in the first few weeks gives us a reliable indication of the direction of the market for the year as a whole. When Japanese candlesticks were being developed, Japan had a very martial culture. It was natural for them to see the trading day as a battleground between the forces of buyers and sellers, and the opening positions and shots in any battle can be of vital significance. Likewise, at the end of the trading day, pressure forces the hand of many traders. They might be thinking of targets that must be met or the danger of missing opportunities. Now, these considerations hold true for the majority of exchanges, but of course on Forex we've got 24-hour trading. The world spins round, exchanges start trading and others stop for the day. Openings merge into closings, which in turn merge into fresh openings. It's all very zen. It's difficult to know where the beginnings and the ends are. The only things we can say for sure on the Forex market are that we must take all 4 key prices into consideration, and we can only be certain of a candlestick's length and colour only after it has been formed. Let's get on to the candlesticks themselves. We'll start by taking a look at the Doji. This means unskillfully made. Unskillfully because they don't have a body, merely a horizontal line. We get Doji when the open price and the close price are equal. This is usually taken as a sign that the bulls and the bears are well matched and their meeting resulted in a draw in this period. Doji signal indecision. Prices closed where they opened, on as even. Let's take a closer look at the conditions that form the Doji. Let's say that price grows after the open. What we see forming here is known as a moribotsu, which means shaven, because it doesn't have any shadows. The bulls seem to be gaining the upper hand, but then the bears counter-attack, price falls and the candlestick body turns black. What we can see now is called the inverted hammer or the shooting star. But finally the bears counter-attack fades, prices rise once more, and at the end of the period price closes at the same or almost the same level at which it opened. Voila, the Doji. This type is known as the long-legged Doji or the rickshaw man.
The long-legged Doji, the rickshaw
Skilled traders
man
understand the Doji to mean caution. It signals uncertainty.
That's what we seen yesterday when we was on the market. I showed y'all what that Doji looked like. That boy so indecisive.
Especially significant if you believe you're at the top.
Gotta be careful on them Dojis. I done been twisted up on them Dojis before. Them Dojis, that them
The rickshaw
Dojis.
man's crossbar is always roughly central. The candle should be long. Remember, the rickshaw man merely means indecision, and the trend could reverse, could go into a range, or who knows. If you get a doji at the top of the market that looks like the top half of the rickshaw, you've got a stronger signal of indecision. This doji is the consequence of a draw too, but it forms when the only price push of the period was bullish. As this doji expanded on an uptrend, it means that for a number of days in succession, the bulls had the upper hand. Only this time they attacked, but the ground they gained in their charge was cancelled out by a bearish counter move. This doji is known as the Gravestone. It was named in the days when traders could only make money on a rise in prices, and it buried all hope for future profit. At the bottom of the market we can find inverted gravestones. They go by the name of the dragonfly, a symbol of the promise of summer and easy living. The dragonfly signals the reverse of a downtrend. Prices may well take flight, up and away in a beautiful flash of jewel-like colour. The signal gains force if more than one doji occurs on strong support.
Oh shit, I have to start dancing. I didn't even see that.
Trend lines. But my friends, fools rush in, and it's not a bad idea to wait for further confirmation. In this case, we get a couple of hammers, more of hammers later, and a strong move up, and it's time to get stuck in and make some money. The beauty of Japanese candlesticks is that one single candle has the potential to predict future price action for days or even weeks ahead.
Understanding Japanese candlesticks.
All our lives, but all we will ever get is an amazing variety of imperfections. It's very easy to say that the closing price will be equal to the opening price, but it's easier said than seen. I'd rather have a flawed diamond than the perfect pebble, and we have to accept reality, warts and all. So be ready for deviations from the doji ideal. I accept a candlestick with a body 10% of its height from high to low. For example, this one, or this one, and there's another. The colour of the body is of little account with these deviant dojis. Just remember the saying, fools rush in, applies to all doji, ideal and deviant. Always look for confirmation of the signal. We'll look at some other deviants of rickshaw man, the dragonfly and the gravestone in a bit. But first, a word of caution. People often wrongly assume...
Dog, what the fuck, bro? These niggas really just hit me with a whole nother, like, they think I really wanted to see that bullshit, bro. Don't do that shit no more, my nigga. Piss me the fuck off, that whack ass shit on sitting here in about my video. I don't even know what the fuck I was thinking about.
In fact, that happens pretty rarely. Our traders are standing at the crossroads. Reversal signals point to indecision, and you can never be too sure which way price will move next. The first thing to remember is that a complete trend turnaround usually occurs gradually, step by step, as the psychological state of the market changes. That
actually works right there, because it makes pretty sense. Like, it makes sense. Like, if you actually seen that happen in the market like that, it actually adds up pretty well.
Let's take a look at some reversals at the top of an uptrend. Here, the uptrend ends and prices drift for a while before a downtrend begins. And here we see that after stalling in a range for a while, the prior uptrend resumes.
Consolidative state before it came down.
And here the uptrend sharply reverses into a downtrend.
See, yeah, see, I didn't, yeah. See, you
All
got
the signal can tell us for
how
certain
quick you gotta be
is
out
that the
now.
trend is under stress, and we should
There's sharp
close our
reversal right there
positions
off
on the
that
trend
Doji right
and
there
take
off
our
top.
profit.
So clean, no cap.
Here are the other deviant dojis I mentioned earlier. They are also reversal signals, of course. If the doji crossbar is in the top third of a long candlestick that is at the bottom of the market, it's a signal for the end of the bear trend. It's a deviant dragonfly. Conversely, if the crossbar is in the lower third of a long candlestick at the top of the market, you've got a deviant gravestone on your hands, and the bullish trend
Yeah, your
is
boy
under
tired.
stress.
Been doing that work, putting that work in, trying to make sure the videos get uploaded. Show the progress to myself, putting that work in. I ain't been back to sleeper since like,
is that you should always seek confirmation from
I
other
don't know when
signals
this morning for
before
real, probably
opening
like
a
that.
new position.
But I got through like 4. I got up at like 4 or 5. You
If
man,
a
oh,
bearish
smacking the
doji is at
camera.
the
I
top
must be
of a
too
bullish
tired.
market, we know that this
It's
means
cool, though.
indecision, steady.
Got another.
It's too early to short on this signal. Close your longs, square your positions.
30, 40
take your
minutes on this video.
This same signal
So,
would,
I mean,
however, be a good
it
basis
is what
to
it
go
is.
short on a
Ain't
bear
tripping,
market, especially if the doji was retesting a resistance level or the trend line.
Man, I remember like, you remember like 4 years ago, I did not have none of this. That's crazy. If you go back on my previous videos from like years ago, I love some other, I did not have none of this. I look like a little baby.
The majority of
little
Japanese
ass kid.
candlestick signals are reversals. And
I
here
still
are
look
two
like
more,
one.
the hammer and the hanging man. These are one candlestick patterns too. They have long lower shadows and small bodies, which are in the upper third of the price
The
range.
hanging man. It's the
Surprisingly,
hanging
it
man.
doesn't matter whether the candles are black or white. When you find one on a downtrend, it's signaling that the trend's life is near to an end, and the candlestick is called a hammer. A similar candle on an uptrend signals the end of that trend, and once again, a reversal signal for an uptrend has a sinister name. It's called the hanging man, and indeed it promises anything but good for the life of said trend. The hammer and the hanging man have 3 identifying features. 1. The body is in the upper third of the price range. 2. The lower shadow is twice the length of the body. And 3. The candle doesn't have an upper shadow, or the shadow is very short. You'll have noticed that hammers and hanging men are very similar to doji. The main difference is that the hammer and the hanging man have bodies, albeit small bodies. They are bodies nevertheless. What we want are long lower shadows, short upper shadows, and small bodies. Though the bodies can either be black or white, a white hammer body tells us that during the period prices fell, but then a revival began, with price closing near the high. It says that the bull enthusiasm is strengthening. A black hanging man says that the closing price could not return to the opening price level. The long lower shadow illustrates the bull's nervousness. Altogether, it points to the strengthening of the bears. Mark my words now, it's especially important to wait for further bearish confirmation when you have a hanging man on your hands. Just imagine the situation. The market is crackling with bullish energy. The next period opens at the previous high or near to it.
For real, they're like
Price
a double
falls
top right
dramatically,
there.
then it rises
Be
again
careful.
and closes somewhere in the top third of the period range. There's your hanging man. The candlestick alone is insufficient to make it a reversal signal. Nevertheless, we can take it as a wake-up call. If the next candle opens below the hanging man's body, those who had bought within the body of the hanging man would be left exposed and in danger of finding themselves in a far worse position. A gap is the traditional confirmation of the hanging man's reversal signal, and the wider the gap, the more emphatic the confirmation. Of course, we know that price gaps are less frequent on the Forex market than they are on the commodities and equities markets, and for Forex, an alternative bearish confirmation is that the candlestick following the hanging man is black, with price maxing and closing lower than the hanging man's max and close. Another confirmation is when a gravestone follows immediately on from our virtual execution, an apt ending no doubt, but also a final death knell for the trend. If a white candlestick follows on from the hanging man, then basically what happens next is anyone's
Not
guess.
another ad. Come
Signal is
on. I'm about to
failed,
punch the fuck
and
out of
you
somebody,
can only
bro.
wait for fresh
That's some
signals,
bullshit,
which
bro.
could
You
as
want to keep
easily be
hearing this
bullish
bullshit. That's
as
what that shit.
bearish.
You want to keep doing that white guy shit, boy.
The hammer should also be confirmed, with bullish confirmation this time of course. So what you're waiting for is a white candlestick, or maybe a dragonfly, to confirm the signal. However, the hammer has more potency than the hanging man. So if a black candlestick follows the hammer, but has a higher low than the hammer low, we can accept the low of the hammer as the probable low for the whole bearish movement. Nevertheless, I wouldn't act on a hammer until I got one of those further bullish confirmations. Japanese candlesticks, like other forms of chart analysis, are observation-based rather than rule-based. The hammer and the hanging man don't have to be perfectly proportioned. Just remember, the longer the lower shadow is, the more potent the signal. The next candlestick tells us that an uptrend will likely end. It's called a shooting star. It looks a bit like one, and it ranks as one of the weaker signals. The shooting star's body is small and situated in the lower third of the candlestick's price range. The upper shadow is long. The shooting star can either be black or white.
The shooting star
is witness to the fact that the period opened near its low, then price rapidly rose and then fell with price closing near the open. When you see a shooting star, you can make a wish for your heart's desire, but listen up. The shooting star needs confirmation. The ideal shooting star body gaps in relation to the previous candle, but it's not always necessary, especially on Forex, where gaps are rare birds. Here, I'd advise you to look for shooting stars on weekly or monthly charts. Like other reversal signals, the shooting star has more weight on longer time horizons. Once you've found it, look for confirmation on daily or intraday charts. After a weekly shooting star has been formed, you may well notice that a different reversal pattern has turned up on the daily chart for the same period. Pay particular attention to a shooting star after a burst of large and aggressive white candles, that is, at the top of a short-term trend. And, as ever, my recommendation at this point is to take your profit, because the trees can't reach the skies, and everything that blossoms will inevitably wither and die. You can see something similar to a shooting star at the bottom of the market, and it's called an inverted hammer. It is the same small body in the lower third of the range, but of course it's a bullish, not a bearish signal. It signals the end of the bear trend it follows. The inverted hammer also needs further confirmation.
An inverted hammer
One confirmation signal is when the price for the next period opens higher than the top of the inverted hammer's body. The bigger the gap, the stronger the confirmation. A long white candle is another confirmation signal.
Yeah, I'm not bored. I'm trying to keep my mind
To be
focused.
extra certain, you can confirm using technical indicators and support and resistance analysis. Although these one candle reversal signals have different names, they share a number of common features. First off, they have a wide price range, and two, they all have long shadows. Candlesticks like this with a small body and long shadows are called high wave. Japanese analysts say that candlesticks with very long shadows have lost their way. A group of high waves is a strong signal of the trend reversal. Here's what a group can look like. See how the shadows are leaning on the support level. Price cannot punch through it at all and promptly rebounds off it. These so-called lost candlesticks can tell us a thing or two about the way to go. Let's move on to reversal signals generated by combinations of candlesticks. The first combo I'd like to take a look at is the engulfing pattern. It's a significant reversal signal and is formed by two candlesticks. The engulfing pattern has three basic elements. 1. There needs to be a decent uptrend or downtrend. 2. The engulfing pattern is formed by two candles with the body of the second completely engulfing that of the first. The shadows may also be engulfed, but this is not necessary. The body should be different colours. The only exception here is if the first candlestick is a doji. So, if at the end of a marked downtrend we get a black candlestick, which is in turn engulfed by a long white body, then there is our engulfing pattern reversal signal. Similarly, at the top of an uptrend, a white candlestick engulfed by a large black gives us a bearish engulfing pattern. The reversal day is the western counterpart of the engulfing pattern. We talked about it in chart analysis 2. In a reversal day, a new maximum is set on the uptrend and price closes below the low of the previous day.
Just get the fucking
However, the engulfing pattern also gives a signal when there isn't a reversal day, which can give an edge to the trader who is using candles. The engulfing pattern is more significant if the first candle has a very small body and the second is very long.
What time is it?
This tells us that the balance of power is shifting more emphatically. The pattern is also more significant when it appears after a very lengthy or dramatic price move. The former suggests that all potential buyers went long some time back.
Be on the lookout for episode 4. This is going to come out right after episode 4.
Upwards, whilst a downturn after a dramatic price rise forces a lot of positions to be closed to take profit, adding to the downward push. If the second candlestick of an engulfing pattern sees an increased volume, then this suggests that the prior trend is overextended and it increases the significance of the engulfing. Finally, if the second candle engulfs more than one candle, it increases its importance too. Next up is dark cloud cover. It's also made of
this gonna
two
go in
candles.
after 4.
You can find it at the end of an
study a little bit more.
uptrend or near the upper channel line of a trading range. Dark cloud cover signals a bearish reversal, and here it is. The first candle has a long white body, and price opens the next period at a new high. I mean, it's higher than the previous candle's high. However, price cannot maintain this momentum and closes significantly lower. Most analysts agree that price should close below the previous candlestick's midpoint to qualify as a potential reversal signal. The lower the second candlestick closes in relation to the first, the more likely a reversal will be. The name dark cloud cover could well be connected with the fact that the chart has a stormy horizon and difficult times could well be ahead. Dark cloud cover's signal.
I just tried to do a screenshot. It was not working. I'm sorry. That was involved in the screenshot.
The closer the black candle's closing price is to the previous white candle's opening price. 2. If both candles are shaven, that is, without any shadows.
Now, I see me taking a picture. I don't know why it wasn't working.
And closes with the whites open.
That's crazy.
Or thirdly, the second candlestick opens above an important resistance level and then the price falls. This tells us that the bulls cannot control the market. They could not maintain the initiative and were repulsed.
Shaved head ass candles. Shave that candle head. Shave that candle's head. Shave that head. Shave that head.
Dark cloud cover has its precise antithesis at the bottom of the market. It too is a good reversal signal, a bullish one this time of course.
Exactly.
It goes by the name of the piercing line. Again, we have two
That's what happened
candles.
yesterday.
The first
Gotta pay
along
attention
black,
to them
and the
resistance
second
levels.
along white.
That's what they're
The
called. I was
white
saying
candle
Q
opens
levels,
below the
but
low
that
of
means
the
the resistant
previous
level.
black
They're the same
candle.
thing.
Then price rises, forming a white body which closes above the midpoint of the previous black candle body. Once again, the white body only partially covers the previous black body. The more it covers, the greater the chance of the reversal. However, if our pattern is followed by a long black that closes below the low
Take a look
set
at it
by
right
the
now. It
bullish
looks like
piercing
it's
line,
still sitting
or
inside
if
of
the
that
following
boxed
long black
area.
engulfs the white, then a continuation
I
of the
had
downtrend is a distinct
put around
possibility.
it that area earlier.
It's useful to understand what's happening behind the piercing line.
I might wait then.
The downtrend that
couple
the
hours
piercing
and
line is
finish the
formed on
video.
is, of course, a series of bearish black candles which confirm the current dominance of the
Figure
bears.
something out.
When the open price for the period gaps below the previous low, it can inspire the bears to strengthen their short positions. However, price then begins to grow and closes a fair distance above the previous day's close, and the bears' strengthening tactics have resulted in significant losses because they sold at the absolute minimum price. Now the bears are forced to cut their losses and to try and rescue any profit they can from the short positions they opened earlier. In other words, they are forced to buy. You can gauge the significance of piercing line using the same determining factors as for dark cloud cover, but for the bottom of the market rather than the top. Take a look at the Harami pattern. It's basically a back-to-front engulfing pattern. Harami means pregnant in Japanese. What you have here is a long candlestick, which I suppose is meant to be the mother, followed by a smaller candlestick playing the role of a child.
Oh my God,
At the top of the market, the mother is a long white candle with a bearish baby.
Last
And at the
nerves.
bottom, we find
That's all they
a
want
long
to do is
black
show you
followed
ads.
by a short
They don't
white.
want you to finish
In
nothing.
both cases, the real body of the mother should completely engulf the real body of the baby. There are no hard and fast rules for the relative sizes of mother and baby, but bear in mind that the smaller the baby is in relation to the mum, the more potent the signal probably is. And I always like to remember that a small real body with long shadows means indecision on the market. And to me, indecision means beware, change is in the air. The Harami is not the most reliable of reversal patterns, but it's a useful warning to tighten our stops and be on the lookout for more signs that the current trend is on the wane.
Yeah, that kind of dude looks like a Harami.
When the short candle in the Harami is a Doji, we call the pattern a Harami cross. The trader that ignores a particularly long white candlestick followed by a Doji is taking an unnecessary and foolhardy risk. When you spot Harami cross, look after number 1 and square your positions. Although it can be seen at the bottom of the market as a long black body followed by a Doji, it's generally accepted as being more pretentious at the top. Let's move on to some poetically named patterns. The morning star has always symbolized a new dawn. It announces the sunrise and brings the promise of a brighter day. In Japanese candlesticks, the morning star is a good reversal signal found on a bearish market. It's a 3 candlestick signal. The first period sees a candlestick with a long black body. This is followed by a short candle, which can either be black or white, and which opens lower than the previous period's close. This second candle is the star. Then we get a white candlestick which covers a significant proportion of the first candlestick's body by closing above the first candle's midpoint. You may well be able to explain the story behind the pattern yourself by now. The long black body means that the price is falling. The bears are feeling good. The small real body of the next period tells us that the downward thrust in price has become destabilized, leading to uncertainty and indecision. A sudden burst of volume accompanying the second candle confirms the power of the star.
Oh my God.
The third candlestick, a long white body, illustrates that the bulls have gained the initiative and launched their counter-attack. The perfect morning star has gaps before and after the middle candlestick, but in truth you will rarely come across the second gap. In my opinion, the absence of this second gap does little to reduce the significance of this reversal pattern. One way of reading a multi-candlestick pattern is through blending. The idea is that you can make one candlestick out of a number by taking the open, close, high and low from the group. So with this morning star, we take the open and the high from the first candle, the low from the star, and the close from the final candle. This gives us a dragonfly, or at least a hammer with a small body, over 3 time periods. In other words, it's a good reversal signal. The morning star has its opposite number at the top of the market, where it's known as the evening star, the first sign of the coming night.
I might get a big old grab that charger over there. I'm trying to think if I want to.
As a bearish reversal signal, the evening star must appear on the uptrend to be a signal. Once again, the evening star is a 3 candlestick pattern. First off, we get a long white real body, followed by the star. The third candle, a long black body, delineates the top and completes the pattern. The long black body closes below the midpoint of the long white, confirms the top formation, and finishes the entire pattern. The main gauge of the potency of this pattern is the degree that the long black covers the long white real body. Although the evening star is primarily a reversal signal of an uptrend, it also gives us valuable information when price nears the upper boundary of a trading range.
Sir, we got it.
let's list the factors that increase the likelihood that the morning and the evening star will live up to their promises.
1. The presence of gaps before and after the star body. 2. The degree at which the third candlestick body overlaps the first. And 3. Small trading volumes for the first candlestick and large trading volumes on the third testify to a weakening of the prior trend and a consequential strengthening of the reversal. Doji can be stars as well. All they need to do is to gap above from a previous candlestick body on an uptrend, or to gap below the previous candlestick body on a downtrend. These evening and morning doji stars are harbingers of reversal too. They only need a long black for the evening doji or a long white for the morning doji to confirm the signal.
Oh my gosh.
These are morning and evening stars with an added punch,
This is ridiculous.
with the doji being that extra special ingredient. A doji star on an uptrend gives us a good guide to the top of a movement. Don't forget that if the doji star is followed by a gap with a white candle above, then the doji ceases to be a bearish signal. A mirror image of the situation occurs on the bottom of the market. The pattern deserves your extra special attention if the star forms on an uptrend with a total gap upwards. What I mean by a total gap is that nothing, not even the shadows overlap, and the star is followed with a similar total gap downwards by a black candle. What we have here is one of the strongest reversal signals around. It goes by the evocative name of the abandoned baby. There the poor little thing is, high and dry, completely alone.
Living shit out of you just to do it. Serious.
The only consolation for our more sensitive viewers is the abandoned baby is a very rare pattern indeed.
Once again, we get a mirror image at the bottom of the market. This is an abandoned baby too, but this time it's bullish. It is also an extremely rare pattern. The abandoned baby is similar to the western island tops and bottoms, with the star playing the role of the island. On the currency market, we will only see such babies on the longer period charts. However, on the stock markets, you can find them on hourly candlesticks.
Not the abandoned baby. Not the abandoned baby.
The next pattern is called the tweezers.
Yeah, you never really see
It's
the
made up
abandoned
of
babies.
two candles
Those
that
are
are either
pretty
next
rare.
to or
If
near
so, you
each
better
other,
know that
which
baby
have
was
identical
abandoned.
highs at the top of the
For real.
market or identical lows at the bottom of the market.
Rare.
The tweezers are
bead.
normally formed
Rare
by the
breed.
shadows, and the candlestick real bodies can be of any type, from a doji to a shaven top or bottom.
Generally, tweezers are not considered to be a strong reversal signal, but their importance grows if they occur at the end of a very long trend or as part of a larger reversal pattern.
The tweezers. Yeah.
On daily and intraday charts, you should focus on tweezers
Probably
which are
let
close
this
to
video right
support
about
or
another 5 minutes or
resistance
so,
levels.
but I ain't gonna watch the whole video. We probably got another
Tweezers that consist of doji or other candles with long
10,
shadows
11
are
minutes left.
especially worthy
Probably
of
just
our
might end
attention.
it. It was a
So
good
on an
video,
uptrend,
though.
we're looking for
Again, I'ma
tweezers
go
made
back
up of
and watch it
doji,
a couple
gravestones and
times.
shooting stars, with the second candle opening near the
this,
period's minimum, rising up to the
I'm
previous
on YouTube
period's
more than
high,
anything,
and then
so
falling back again,
I'm gonna be
as if
watching this
exhausted,
video multiple
to around
times,
the
just like I
opening
was watching
price.
it before I
The
recorded
longer
this
those upper
reaction
shadows
video
are,
to it.
the more weight we should
Shouts
give
out
the
to my boy
tweezers.
Ty.
On a
That's who
downtrend,
brought
we'll be
the
looking out for
video to,
dragonflies,
fruition
hammers,
on YouTube.
and any doji with
Noticing,
long
you know.
lower shadows.
So I'm probably put him down in the link below, so you can go watch the
Tweezers
video
that have
anytime
candlesticks
you want,
between their arms
even
are
without watching
also
my
of
video.
higher significance.
'Cause it's
And
a
if
good
there are a
video.
lot of candlesticks between the arms, you've got what Western technicals describe as double tops or double bottoms, which confirm levels of support and resistance. Just cast your minds back to our films on chart analysis.
Basically, tweezers are useful when they're used in conjunction with other signals. They're good confirmation.
However, tweezers that you find on weekly and monthly charts can be taken as a reversal signal in their own right. They have no need of confirmation, and they provide us with new levels of support and resistance.
The Western triple top and triple bottom have their counterparts in Japanese candlesticks too.
In Japanese candlesticks, triple tops is known as three mountains. It is seen as an important reversal pattern and is formed when price is repulsed 3 times by a resistance level. The third mountain needs to be graced by a bearish pattern or candle, for example a doji or dark cloud cover. If the middle mountain is the highest, then this pattern has the special name of 3 Buddhas. In the West, this same pattern was named the more prosaic head and shoulders, although it had been identified and exploited in Japan for more than 100 years before. At the bottom of the market we find the 3 rivers. We get this pattern when price tests the same minimum level 3 times.
Might as well
The
finish it at
reversal
this point.
pattern is said to be
You can
confirmed
watch
when
this whole
price
video
breaks
and
through
then go
the
watch the
level of
original.
2 intermediate peaks between the 3 river valleys. A 3 Buddha pattern found at the bottom of the market would be known as the inverted head and shoulders in the West.
That's 3 brothers. That look good though. That's like
Our
the
final reversal patterns of today
formation that I
are
was
very
drawing out.
reliable 3 candlestick patterns.
3 black crows tells us that an uptrend is near to an end. These 3
W.
long black candlesticks need to close at or very near to their lows. Therefore they should have no or almost no lower shadows. Traditionally, the second and third crow should open within the body of the previous crow, and each crow should close beneath the previous one's low. But on the Forex market, we can accept the pattern when the second and third crow opens at the previous candle's close. This pattern is stronger if the first candle closes below the previous white candlestick's body. At the end of a downtrend, we find 3 white soldiers leading a bullish attack. These are 3 long white candlesticks, each with a higher close than the previous soldier. Once again, price should close at or near to each soldier's high, giving each soldier either no or very small upper shadows.
Windows are a different aspect of Japanese candlesticks and usually serve as continuation signals.
Windows is the term that the Japanese give to what the West call price gaps. The window is a price gap between the shadows of 2 concurrent candles. This is a window on an uptrend with the gap between the first candle's upper shadow and the second's lower shadow. And this is a window on a downtrend. Price moves in direction of the window, so when it gaps up, price will continue to rise in all likelihood, and when price gaps down, it should continue to fall. Windows also provide us with fresh levels of support and resistance. For example, the window on the uptrend is a continuation signal and price continues to rise. The correction of this uptrend should find its support at the level of the window. If the fall in price continues, closes the window, and bearish pressure continues, the previous uptrend is considered over. On a downtrend, a window signals further price falls. Any correction should end at resistance at window level. If the window is closed and prices continue to climb, the previous downtrend is over. Japanese candlestick analysis teaches us to expect price to retest these windows levels of support and resistance, and when there is a correction on an uptrend, for example, we should use window level as a buy zone. Of course, if prices continue to fall and close the window, we should square all long positions and consider going short. For windows on a downtrend, our strategy should be the reverse.
Always remember that chart analysis is subjective in nature, and that successful technique comes through application and experience. There are no hard and fast rules here, there are only general principles which we can apply and interpret. As I said in our first film on chart analysis, never underestimate the market.
When you are on the market, you have to look after yourself. The market won't look after you, and it doesn't take any prisoners. Do yourself a favour. Don't leave yourself exposed. Set your stop loss orders. Prepare yourself well. Make a plan and stick to it.
Well, that's just about it for today.
Should be about wrapping it
I
up,
hope
guys.
you found this film useful and that you now have an understanding of the basics of Japanese candlesticks.
Candlesticks are a useful weapon in the trader's arsenal and should open up fresh opportunities for you on the market. Take a look through Rumus's vast historical data banks. See how the candlesticks warned the alert trader of changes ahead. The principles of Japanese candlesticks have been honed through the years. Use them wisely and you will reap your just deserts.
Thank you very much for your time and attention. If you have any questions, you can contact me at www.fxclub.com. Take care now and trade well.
Exactly. So, yeah, guys, that was it for that video, that inspirational, helpful video. Again, it always helps me. This is not the first time I watched this video. It won't be the last time I watch this video. Again, I watched this video to just kind of, you know, remind myself about the understanding the candlesticks, and it's a pleasure that he, you know, uploaded this video to just, because it's such a great video, you know what I'm saying? It teaches you, kind of breaks it down from like the certain candlesticks that you gonna see and you gonna use, to like how they could counter attack and just attack at any time, and you know how you could read it and go by, you know, your risk or your you know, what you feel like is gonna happen. So it's always a good thing to know about the candlesticks, or just to know about what you're reading, rather it's a graph, rather it's the line graphs, rather it's the candlesticks, rather it's whatever, the bars. There are many options out there. But again, yeah, shout out to Tyler there on YouTube for making this video. Well, not even making this video, but for uploading it on YouTube. You can put a watermark down at the bottom so you can't really take it. Yeah, appreciate that, man. Shout out to all the other YouTubers that helped me through the journey with also understanding the candlesticks. List a couple. I can't do too many. Let me see. You got my boy Swag. You got my boy Doyle. You got that boy Jeremy Cash. You got that boy Denny the Trader. He just uploaded a video, which is crazy. I'll probably react to it eventually, but yeah, it's a shocking video. Denny FX, I think his name is. Who else we got? We got plenty more Forex traders. We got a whole bunch. I just can't really think of many more names right now. But on YouTube at least. You got Mamba, you got who else? You got Q. You got what's my Daniel. You got a lot of more, YouTube Forex traders. I'm just one of them that's at the beginning stage of my career, and I'm literally taking it, slowly, step by step type. So, it's kind of like you starting off. If you're a beginner, it's kind of like almost like that, but instead I've kind of been doing it just a little longer, just a little, not much. I ain't gonna say it would be a big difference because it's not, but you know what I'm saying? So I do shout out to the big dogs that's holding it down up there, that's putting people on with the real game, not the fake game, but the real game. And yeah, that's just a couple off top. It's a lot more that's putting, making impacts as well in the community, that's going hard and just showing people the wave. So yeah, this is it again for today. I'll probably be uploading episode 4 coming up after this one or before this one. I'm not even for sure yet. Either way it go, you'll be able to see it. It'll be up on YouTube soon. So yeah, peace and prosperity. Shout outs to Organic for saying that all the time. That's where I just got that from. And yeah, just shit. I'll be back tomorrow to look back at these markets. We about to go in like always. You know what I'm saying? So let's get it. Yeah.